Hey Trade Pros, today we're going to be going through an advanced use of the footprint. We're going to be going through some concepts of the footprint that we could consider more of an elevated level where we can actually use it to dissect trades, find trade opportunities, and for execution. So I'm going to be breaking down these two main concepts that we're going to be using today on the footprint in this video. So if you guys are excited about that, stick around, drop a comment down below, hit that like button, and we'll get right into it right after this intro. So I hope you guys are excited, and let's dive right into this. So welcome back, and today we're going to be jumping right into this footprint and breaking down some of these good concepts that you guys can use on the footprint. Now, the footprint tool we have right in front of me is a footprint for the S&P 500 futures. Now, this is predominantly used in the futures market. I believe that some indices, right, like triple Qs and SPY, the more liquid assets, some stocks have pretty viable footprints. So I'm mainly going to be using it here on the S&P 500 because it is heavily traded, very high liquidity, and big contracts go through with this. Now, first and foremost, let's break down what the footprint is. This footprint chart that you see is a visual representation of individual candles based on a tick movement that have the orders within them. So every single one of these candles is a 3-point range, right? So that means 3 points, 12 ticks on the S&P 500. The footprint, right, each individual candle represents that type of movement, so they're all going to be the same size realistically. Now, within each movement, we have the contracts that are traded at the ask and contracts that are traded at the bid, along with delta at each individual level. The delta is the ask minus the bid that comes in that creates either a red delta, right? Meaning that the bid traders, people that come in at the bid, the market sellers, are greater than the people that trade at the ask, right? So when I see negative delta, these are people that trade at the bid, and these are pretty much aggressive market sellers that are coming in. Now, on the blue side, right, each candle that is a down candle is red. Each candle that is an up candle is blue. And on the blue candles, it's the same concept here, right, where you have the blue delta that comes in, meaning the ask traders are greater than the bid traders in that sense. There's a few other tools over here that we have that we can explain on this footprint. I've done a video on this a little more extensively before, but you have imbalances that are in there, meaning that they're 3 times greater than the opposite diagonal, right? So they'll light up in that case. These zero prints over here, something that we'll go through as well. And then we have 2 profiles. We have a profile for the individual day and a profile for the overnight session. So the RTH and the ETH with delta, obviously cumulative delta attached to them. So at the bottom down here, we have the delta on each individual bar that's also at the top of the bar. And we have the delta for the day cumulative. We also have the volume for each candle. Now we're going to focus predominantly what you see here on the actual chart itself. And if you want more in depth, right, you can check out our footprint video, but we want to mainly jump into these concepts right now. So reading this footprint, right, obviously when you have a bunch of red candles, the expectations for prices to go down, especially with heavy delta, that means that there's a pretty aggressive selling that's happening at that point. Now, the footprint, I use the footprint for 2 specific things. These are the 2 specific concepts that we're going to be covering today. Number 1, I'm going to be using the footprint to help you identify where the market continuation is happening, right? Where strength is in that expected move, so I can follow that trend. Number 2, I can help identify where market reversals are through absorption and the concept of what we can call a rejection candle, if you will. So these 2 main things are what's going to help me really dissect and use this footprint. The footprint is an order flow tool, right? Remember that. It shows us how the order flow trades with one another, right? Meaning the ask side and the bid side, how they trade together, these market orders that come in, and the imbalances that get created through either single prints, imbalances, or the delta on each one of these bars. So this is going to be very important. I want to understand where these delta footprint imbalances are so I can identify if the strength is to continue or there's going to be something of a reversal in price. So both of these things put together can help me stay on side of the trend, on side of the move, and also away from trying to constantly fade until there's some kind of reaction and some kind of reason to actually fade this. So first, let's talk about the trending moves in the footprint. If the current move is consistent with consistent candles, right, I want to stay in that direction, or I don't want to at least touch it or fade it, right? I can identify the strength by, number one, right, the colors of these bars, right? If they're all down candles, I'm expecting this to continue. If they all keep closing as down candles, I expect it to continue. I also am looking at the imbalances, meaning the delta. So in this case, we have a move to the downside, right? These are all red candles in this case, and we have very heavy negative delta that shapes up. So this heavy negative delta, as long as we don't bypass it completely, right, reverse it completely and stay and hold it, right, I want to keep on side of this downside momentum move, right? I can also take a look at where these imbalances are, right? If there are multiple legs of imbalances, right, like let's say 3, 4, 5, here are these single prints. If they were somewhere located into this area, then I could keep track with that. So that tells me that the footprint is holding in that direction. So in this case, right, if we keep closing these red and we keep respecting where these large imbalanced, oversized at the bid traders are actually sitting, these like larger sellers that are coming in, then I want to keep on side of this, right? These more aggressive sellers, I want to just stay there and stay on that short side. So, and this suggests speed and strength, right? These aren't moves I want to get in front of, rather I want to be a part of. They can help you jump onto trends that are fairly late as well, right? If I'm seeing all this downside momentum and they're actually holding, right, all of these negative deltas, I can look to sell into some of these negative delta blocks to continue that momentum to the downside realistically, right? As long as these guys hold, even if it's kind of in the middle of areas, I can still sustain with the concept of these large deltas holding. Now, another aspect of that, we can use the cumulative delta chart here as well. I don't want to disregard the auctions, right? I want to keep the auctions at bay as well. So if we talk about auction theory, I want to know where there's large auction imbalances, meaning like distribution ledges, but I can also see where this like large delta shapes up. So for example, right, we have a very thick positive delta here, like 1400 on the day session that was created. If we offer that and like large negative delta continues to hold below that, right, I know that there is strength to the downside momentum move, realistically. If there's big clusters on the delta side, I can stay on trend with these individual footprint deltas that are coming in. So this is where I can pinpoint the continuation of these moves. Whether it's to the upside or the downside, if we take a look at another example here, we can identify where this strength wants to hold and how it wants to continue. So, for example, right, if we look at what happened into yesterday's session, pretty much before the open, there is a lot of strength to the upside bid. So, if we move along here, right, it might take a while. Like over here, we start a pretty strong trend to the upside, right? So there's a move that happens into these regions. So you see very, very heavy positive delta, and we have all of these blue candles, right? Cumulative delta is going to the upside, very positive delta. So I want to be a buyer into these regions. So there's a big delta that's holding support. There's these guys over here. They pop up. As long as we hold these very thick deltas and don't completely reverse under that area, right? I want to sustain this upside move. So I can be long here, here, here at this point, here at this point, right, until we continue this momentum to the upside. So I want to pinpoint where these color-coded deltas are. That's another thing, right? The brighter the color is, the heavier the delta is, and the harder the imbalance is. So if they're kind of muted, if they're kind of like darker, I don't really mind them. But if they stick out and they're super light like this, right, I can see that these are most likely going to be big areas I want to hold. So even if I'm buying over here with this like super exaggerated positive delta, and I have my move over here, like I'm buying into that 40, I'm not taking too much risk realistically because these guys are continuously holding. I can stay on trend too when I notice that there might be a blue candle that comes in with like heavy selling and it closes blue with a lot of positive delta. I want to be on side of that move, right? Until these areas break, I can continuously look for that long side. Now, obviously, as the trend continues and it gets a little later, I don't necessarily want to be too active on that front. But if I can catch this move early based on where the auctions are, based on where the cumulative delta, I can stay on side of these things. Now, another aspect to this is also turning points and rejection, right? While we're here, we might as well take a look at these highs. So there are turning points. This is a secondary concept of delta and how this delta formulates. So at a certain point, these trends do fail, right? They're going to fail. And I don't want to be anticipating where they're going to fail without actually seeing any reasoning as to why they're failing. So this is where the concept of absorption or even rejection candles come into play. Absorption is a delta tool. Now, where the traders fail their continued move, we would anticipate a price reversal. So if I'm talking about absorption is the idea that, for example, there's a lot of market buying into a high, and there's very positive delta that stacks up into these highs, and they ultimately fail. So if I'm pinpointing these areas where there's super heavy positive delta that wants to hold all this positive delta, and they start actually rejecting back under, and we have large negative delta against it, right, especially sweeping, this could be considered like the last man standing, right? The threshold of this huge positive delta that pushes prices up. We start rejecting under it with like large people coming in at the bid. That would tell us that realistically there's going to be some kind of reversal at that point. Now, when we talk about absorption would be the stack up like multiple areas, multiple candles of rotation with a lot of positive delta coming in that creates a cumulative delta area that has very positive, heavy delta into that top, right? So that would be a concept of absorption. So if we take a look at some of these areas into the lows most recently, absorption is a factor that creates, right, a lot of either buying or selling into a high. So when I see all this accumulated delta into a low, right, very, very heavy negative delta into a low, right, over here, and they keep rejecting it. These blue candles come in, right, with net negative delta on the candle. There's big delta at the lows, and they keep pushing back up, and they keep accumulating a lot of this sell pressure into the lows. That's what's telling me that these rotationary areas are creating absorption. So I see like big at the bid traders here, they're trying to push, and every time they fail, which is telling me that there's going to be some kind of a reversal in price. So when I see that concept, I also want to keep in confluence where the auctions are. But when you see multiple tests and people constantly selling into lows and nothing's happening, you're expecting to see a reversal, just as you would with people trying to sell or buy into a high, I should say, and people are starting to sell against them. So if we take this concept as well into these highs, this is after a PPI report, you can see there's decent buying. Massive buyer steps in here, big buyer with an imbalance. When these imbalances come in single prints, you want prices to continue from there. If they reject instantaneously and they cut away from all of this buying into this high, you're going to get that stronger reversal to the downside. This is the concept of absorption that gets created into these areas. Right? You can see them at the highs and the lows as well. So at this point, right, we got this sleek downside move, and all of a sudden, right, at this point down into today's lows, you have this single print that gets immediately rejected, right? People coming in at the bid that immediately get rejected by big buyers. This is the culmination of absorption that we want to play against, and we can start buying these areas over here in anticipation of a pop. So this is where I can identify that the trend is actually going to stall out, and I can find some kind of reversal more cleanly. If I bring in the concept of a rejection candle, the rejection candle is going to be the first candle that's opposite to the current trend. So if we see red, right? And the first blue candle is a candle of interest for me. Now, I don't want to stray away from auctions. I don't want to stray away from those concepts where we have large imbalances on a different plane, because if I take a look at this, right, from an auction perspective as well, what I can see over here is from the CPI date, we had a massive positive delta at these lows at 17 that really start off this new auction into these all-time highs. So this is a massive auction ledge. Into this area, we want to know that where this imbalance actually sat, so there's a very high probability that buyers are going to try and step into that region. So if I use that in conjunction with this footprint, right, what I'm waiting for is the first rejection candle to give me some kind of indication. Now, the rejection candle isn't the be-all and end-all, because you can have this and then a continuation, but if you have a clustering of a lot of at-the-bid traders that come in at the lows, you have these single prints and they immediately get shut off by all of this buy delta, all this positive delta, and prices reverse. You have a strong region where you can attempt that reversal in price. right? It's a huge opportunity to find where trends actually reverse and where you can actually take the fade. Is the same concept right down here. We get to move back down to these lows, big sell, big sell. Big seller comes in here, they reject it super aggressively. They accumulate a lot of net negative delta with buy pressure, and you get that reversal. So at a certain point, right, there could be a breakdown, and this is the concept you want to see. So where can I buy this? There's just constant selling. No one's really getting trapped down here. There's no real crazy numbers on the red side, right? The blue side, no one's really getting aggressive on that side either. And all of a sudden, right, big drop, massive delta, this should hold. Big drop, massive delta, this should hold to the downside. They sweep it back up. This is your rejection candle that comes into play with big buyers continuing this move. So let's see, right? Will this trend continue? If I look at this over here, you have a nice big juicy buyer that stacks up at that 17-16 area. So realistically, between like 15 and 16, I want to hold on the long side. You can see these imbalances here, they're holding. So somewhere over here, between 15 and 16, I would anticipate that they actually sustain this continued momentum move. Huge, juicy positive delta against negative delta. This is your reversal. This is where you want to keep on side of these things. So even if we follow this trend, we understand, okay, there can be these rejection candles that come into play. So we move up, right? There's a red candle here on some positive delta. Is it that heavy on the sell? Not necessarily. They bring it back up. Nice single prints. This area should hold, right? We do hold huge buyers. This area should hold. We hold, right? There's some sell pressure that comes in here. Right now, what we're seeing live is the potential accumulation of traders getting trapped into these highs like this, right? Big seller comes in, rejects it. So if we see the continuation of all of this buying get rejected, that's going to be our reversal. So with the footprint, not only can we stay on side, but it can help us identify where these large reversals can come in based on where this delta accumulates in terms of absorption as well as a rejection, right? If there's just constant blue grinding up, I don't want to jump in front of this and say, okay, this is the top, right? I want to see someone actually rejecting it. This helps me keep patient, it helps me keep on side, and it helps me identify where people are actually failing the trend and where that trend can reverse for a higher probability rather than just doing the guesswork. And if we combine this with other aspects, right, other concepts that we have, for example, here with our delta profile and our auctions, these two tools together with the footprint can give us pretty much all we need to trade, right? We understand where the stacks of all this negative delta is into lows, this big buy delta supporting. We have a huge region down here to act as some kind of support structure. All we need to see is someone actually buying into that area and getting trapped so we can find that reversal. It's the same thing into the highs when you have all that area. You look at where the auctions are as well, right? The bottom band of the auction happens to be right at that 17 area. So the bottom band of the auction, 16, 17, as long as we can hold that and we can identify where buyers are coming in, that's our long, right? That's our reversal point. But until then, right, there is indication for the short. So with that being said, the footprint is a great tool to identify where we stay on trend, how we can find a reversal so we don't jump the gun and do this prematurely realistically. We want to find areas where they're topping out or bottoming out if we're going to find a reversal in essence. And that comes from very heavy light blue characters and numbers that are shaping up into the highs, all this positive delta that gets created like this with rejection in terms of real negative delta that pushes lower, right? Which is the opposite for the downside. If we see a lot of really bright red into the lows and it fails and these buyers step up with a lot of light blue, right, to simplify things, that's where I can expect these reversals. But otherwise, the trend can continue realistically. So if you enjoyed this video, this concept of the footprint, drop a comment down below. Let me know what you think. Do you use the footprint, right? Is this a tool in your arsenal? It's a more simplified visual tool of order flow that a lot of people might prefer over the DOM or use it hand in hand with the DOM to really solidify things from a visual aspect. So I'll see you guys in the next video. Thanks for watching, and we'll chat soon.